How many times have you seen this happen? You are convinced the market is going to turn down. You see the market start to fall and you develop a stronger belief that you've nailed it. So you sell the market and you put your stop back at the high before the downturn. That's what everybody tells you to do, and they also tell you to make sure that your stop has room to breathe. So now you have a large distance and a high risk stop loss position, and then you see this. The market pushes up, clips your stop, and then almost mockingly turns and runs exactly where you expected it to go. You have scored another large loss. It feels personal, doesn't it? Like someone is out there looking at your stop order and decided you would be the target. Well, you're not imagining it, but it's not what you think it is either. Most traders just call this stop hunting. They picture a shadowy market maker figure sitting in a dark room running prices up and down just to take out traders' stops. But here's the truth. The market doesn't move to punish you. It moves to find you. You see, your stop loss and every other stop loss is liquidity. And liquidity is what the market maker needs to do business. Think of the market as a massive auction. It needs both buyers and sellers to keep price moving. So when one side dries up, it hunts for the other, not out of malice, but out of necessity. The price spikes you see aren't random. They're search operations. They are quick dives into pockets of resting beliefs. Because that's what stop runs really are. They are search operations, and you should welcome every single one of them. Why? Because they are beliefs about the future made visible. Every stop loss order placed is a trader saying, I will no longer believe in this trade beyond this point. So when the search operation sweeps past those stop levels, it's testing traders' beliefs. It's asking who still believes, who's ready to surrender. And the outcome of that sweep will either see beliefs reinforced or beliefs collapse. Once the sweep is complete, the market is free to move in a defined direction. This is why it's imperative for you to understand what is really going on when you see a stop run. Now let's look at that same section of the chart, but with the PAT indicator applied. What you will see is something quite remarkable. You'll now be able to see those search operations. Now, I'm not going to go into great depth here in this video because you can download the full PAT indicator training manual completely free. Just visit the website, patindicator.com, and you'll find everything there with free access. So, okay, back to our chart. Inside the PAT indicator, we have what we call belief buffers. They are shown on a chart by these orange bands you see. These bands reveal where collective beliefs live. This information is, as you will see, priceless because of the insight it gives you into the future. I'll explain the other markers on the chart in a separate video, so I want to keep this quite tight. So make sure you subscribe so you have access to that next video. So here in this chart, before we play it forward, you can see how the market reacted to the bottom buffer. Then the market moved across the gap between the buffers and settled into trading within the top buffer area. Now here we are at a critical point. Should the market break above this top buffer, we will likely get into a long move, not because of the shape of the chart, but because of the contents of the buffer, not prices in the buffer, but beliefs. If those beliefs in higher prices are not strong enough for higher prices from this point, those beliefs will most likely collapse. Now let's run this chart forward. So now you can see the spike up before the collapse. That quick run up collected liquidity. It triggered all the stop loss orders that the short sellers had placed. The weight of those orders resulted in the collapse. Then the market returns to the lower buffer where the up move started. Now reading this, you now know what is in this lower buffer, not prices, but beliefs. This buffer zone, by the way, is where you would take profits from the collapse and then wait for what comes next. Okay, so now you understand the contents of the buffers and why the market reacts the way it does to these areas. And by the way, for a full explanation of this, like I say, read the online manual and scroll to the buffers section in that manual. So just before we move the chart forward, what do you think will happen to the beliefs that were and are in the lower buffer zone if the market is pushed below the immediate low dip to the left? Let's see. When you learn to read the real structure, these stop hunts stop feeling like tracks and start looking like powerful opportunities. The next time you see that sharp spike, don't see manipulation, see the inner workings and reactions of beliefs. This will set you free as a trader and place you firmly in the winning percentage of traders. Because when you understand how liquidity and beliefs dance together, you stop reacting and start seeing. You'll be trading the real market. If you want to dive deeper, you can also download the free Market Makers Playbook, and I'll show you in that the 7 psychological triggers behind every major move that you've ever been caught out with. And just as a quick teaser for what is to come here, scroll back in the video and look at the chart, paying attention to the small yellow blocks. These are known as whale markers. And again, you can read about those in the full training manual. I'll also be making a dedicated video about these next. So again, don't forget to subscribe so you don't miss it. I'll see you on the next video.